You're listening to AI PRISM from Seoul Economic Daily.
If you hold a Korean bank stock or a rate-sensitive ETF, this week's rate hike is already reshaping the numbers underneath it. Delinquencies are ticking up. Corporate bonds are getting harder to sell. Here's what's actually moving. It's Monday, July 20th. Let's look at what this means for retail investors in Korea. The Bank of Korea raised its policy rate for the first time in 3.5 years, and banks are responding with tighter lending across the board. Corporate bond investors are also pulling back, pushing credit spreads to a level not seen in over 2 years. These two trends both trace back to the same rate move. Here's what the numbers show. Corporate loan delinquency rates at small and mid-sized firms averaged 0.59% in June, up 0.11 percentage points from a year earlier, and banks expect a further 0.05 to 0.08 point rise over the next 2 quarters. Household loan balances at the 5 major banks hit 777.23 trillion won as of July 15th, already exceeding annual regulatory targets. Separately, the credit spread between 3-year government bonds and AA- corporate bonds widened past 70 basis points, the highest level in roughly 2.5 years. A recent bond sale from lower-rated issuer Hanjin saw some tranches undersubscribed, while top-rated Kiwoom Securities drew 4 times its target demand, showing investors are sharply differentiating by credit quality now. This is not a call to buy or sell any specific name. It's simply the backdrop shaping bank and bond-related holdings this quarter. So what does this mean if you're holding bank stocks or bond funds? Earlier, we said delinquencies are already rising. Here's what that actually means for you. Banks with heavier small business loan exposure may see more provisioning pressure show up in upcoming earnings. Bond fund holders should note that credit quality dispersion is widening. Lower-rated corporate debt is facing real demand problems, not just rate-driven repricing. Watch each bank's quarterly delinquency disclosure and any credit rating actions on lower-tier issuers before making changes to fixed income allocations. That's today's AI PRISM, Retail Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a WAN-IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.